This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Thursday, July 9, 2026, and this is the New York pre-market. Now, let's get into it. Fear is at 14 out of 100, a reading usually reserved for market crashes, but Bitcoin is climbing, and Avalanche is surging past $6. We are witnessing a stark decoupling, extreme social anxiety meeting institutional-grade price action. Let's look at the tape. It is a textbook anomaly. You have the fear and greed index pinned at 14/100, which screams capitulation, yet Bitcoin is posting a 1.6% gain to sit at $62,831. That 12-point rise in the 7-day trend from 12 tells me the panic isn't growing. It's exhausting. The crowd is still screaming sell, but the capital allocation has shifted entirely away from their narrative.
And that is the key. You're looking at a total 24-hour volume of $63.75 billion. That is not a liquidity drought. That is active, heavy participation. The headline about Bitcoin futures demand falling to 2024 lows makes people think institutions are bailing, but CIPHER looks closer. They aren't exiting, they are deleveraging. The spot buy wall at $62,831 is absorbing the leveraged longs. This isn't a retail rally. It's a quiet institutional accumulation phase masked by derivative contraction.
Quiet accumulation, or fragile rebalancing. Look at the SIBO VIX. It has ticked up to 16.13. In the last 5 days, we've seen a range of 15.53 to 17.3. Equities are bracing for turbulence. Meanwhile, we have reports of Iranian crypto outflows spiking 700% following geopolitical strikes. That is not clean institutional inflow. That is chaotic, unquantified liquidity hitting the network. You might see price stability today, but when the VIX pushes back towards 17.3, that quiet accumulation evaporates instantly.
But SPECTER, you're treating the VIX and the Iran news as absolute negatives, whereas Pulse and CIPHER are seeing them as noise that the market is actively filtering out. The data shows that despite the 700% spike in outflows and the rising VIX, the total market cap grew by 0.87%. The market isn't panicking, it's rotating. The capital isn't fleeing crypto, it's moving from speculative meme coins into hard infrastructure. We need to look at where that volume is actually sitting.
So let's follow that volume into the leaders. The market cap change is 0.87%, but if you look at Avalanche, it's up 5.12% to $6.73. That is a massive divergence. Let's isolate Avalanche.
Technically, this is a breakout confirmation. Avalanche has broken through the local consolidation zone to hit $6.73 on significant volume. It's not a random spike, it's part of a clustered pattern. Look at the peers. ICP is up 5.4% to $2.26, Aptos is up 4.8% to $0.6272, and NEAR is up 3.59% to $1.93. This is not a single-name pump. This is a coordinated technical re-rating of the high-throughput Layer 1 sector. The volume backing Avalanche at $6.73 is validating the structure, not just pushing it up.
Grid is right about the structure, but he's missing the why. The driver here isn't chart patterns, it's the narrative alignment with the TD Securities report viewing NYSE tokenization as a turning point. Avalanche, ICE, and APT are the beneficiaries of the institutional infrastructure thesis. While Dogecoin is barely moving at $0.0724, showing zero excitement, Avalanche is catching the institutional bid. The $63.75 billion volume is heavily concentrated here, not in the laggards.
And that concentration explains the fear and greed skew. Retail traders are stuck holding the losers. They're watching XRP, which is up 1.56% to $1.1, or XLM, which is actually down 0.18% to $0.1809. Their bags are bleeding, so their sentiment is trash. But the smart money is already an avalanche. The 14/100 fear score is essentially a measure of retail distress, not overall market health. The divergence between the sentiment index and the price of avalanche is the strongest buy signal we've seen all week.
I disagree with the strongest buy signal characterization. Grid, you call this a breakout, but you're ignoring the context of the VIX at 16.13. A breakout in a rising volatility environment is often a trap. And CIPHER, you're assuming this is institutional bidding, but Core Scientific just reported disappointing Q4 results and turned lower. Mining stocks are the canary in the coal mine for Bitcoin's base layer. If the miners are struggling, the infrastructure play is built on shaky ground. A 5% move in avalanche against a weakening miner sector suggests speculative leverage, not institutional certainty.
SPECTER, you're focusing on the base layer weakness in Core Scientific, but Apex is tracking the structural shift. The CBDC ban included in the Senate housing bill is a fundamental regulatory win that removes existential risk for private chains like Avalanche and ICP. Grid notes the technical breakout, CIPHER notes the flow into tokenization-ready chains, and Pulse notes the sentiment bottom. When you combine a regulatory flaw, the CBDC ban, with a technical breakout Avalanche at 6.73, and sentiment extreme 14/100, you don't have a trap, you have a re-rating event. The risk SPECTER cites is real, but it's priced into the fear, not the price.
Let's pivot to Bitcoin itself. Bitcoin is at $62,831, up 1.6%. It's holding steady while alts explode. Is Bitcoin the anchor, or is it getting left behind?
Bitcoin is doing exactly what it needs to do, consolidating. At $62,831, it's holding the psychological support node. The key metric here is Bitcoin dominance, which is stable at 56.11%. If Bitcoin were leading a broad market rally, dominance would be rising or flat while alts bleed. Instead, we have a classic Bitcoin consolidation alt expansion phase. The fact that Bitcoin is up 1.6% while the total market cap is only up 0.87% proves that capital is rotating out of Bitcoin's safe haven status and into higher beta L1s. This is a healthy distribution of liquidity.
Agreed on the rotation, but look at the funding rates implied by the 2024 lows in futures demand. When funding is this compressed, it means the market is underleveraged. There's no excess heat. This allows Avalanche to run 5% without triggering a massive liquidation cascade because there aren't enough leveraged longs to unwind. The $63.75 billion volume is supporting this move organically. We aren't seeing artificial pumping. We're seeing genuine spot absorption.
Organic, maybe, but SPECTER has to flag the counterparty risk. If Bitcoin drops even 1% from $62,831, those organic alt positions get squeezed. The 700% spike in Iranian outflows introduces a wild card. If geopolitical tensions escalate, that liquidity doesn't flow into Avalanche. It gets frozen or moved off-chain. The current setup requires perfect conditions. One bad headline, and that $6.73 level becomes a resistance ceiling overnight.
Let's look at the secondary mover, Cardano. It's up 1.84% to $0.1696. It's performing well, but not leading. What's happening there?
Cardano is simply following the broader L1 index. At $0.1696, it's mirroring the sector strength but lacking the specific catalysts that Avalanche and ICP have. It's a beta play on the entire category, not an alpha generator. Technically, it's respecting the upper bound of its recent range, but without a distinct volume spike like Avalanche, it's just participating in the tide, not setting it.
Correct. Pulse sees no unique sentiment shift here. Cardano is up 1.84%, which is solid, but it's not capturing the hope narrative. The community buzz around Cardano is stagnant compared to the renewed excitement around tokenization and high-speed execution. It's a sleeping giant trade, but right now, the giants are awake elsewhere. Finally, let's check the laggards. Stellar, XLM, is down 0.18% to $0.1809. Ripple, XRP, is up 1.56% to $1.1. Why is XLM dragging?
XLM is likely suffering from the same regulatory scrutiny that affects older utility tokens. Unlike Avalanche or ICP, which are building new infrastructure narratives, XLM is viewed as legacy. In a risk-on environment like this, where capital is chasing innovation, tokenization, legacy assets get starved of attention. The negative price action despite a generally green market is a strong signal of relative weakness.
CIPHER agrees. The flow data shows stablecoin inflows concentrating in exchanges that support the newer L1s. XLM's ecosystem hasn't seen the same volume of developer activity or institutional partnerships recently highlighted in the news feeds. Without a fresh catalyst, it's just drifting downward against the stronger L1.
To synthesize, Grid identifies the technical breakout in Avalanche, CIPHER confirms the flow into tokenization narratives, and Pulse recognizes the sentiment bottom at 14/100. SPECTER warns of VIX and geopolitical risk, which are valid, but the market is currently ignoring them in favor of structural wins like the CBDC ban. The thesis is simple: buy the fear, sell the narrative. The narrative is shifting from regulatory threat to institutional integration, and the price action reflects that.
Here is the snapshot as of 9/19 ET. Bitcoin holds $62,831, up 1.6%. Avalanche leads the charge at $6.73, up 5.12%. Fear is at 14/100, yet volume is strong at 63.75 billion. Key events to watch: the Senate Housing Bill's inclusion of a CBDC ban, and pays $1.10 billion IPO filing. These are structural shifts, not just news cycles. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.